It's December 18th, JLD here, and welcome to MSTR Today and the Treasury Titans. Nothing in this video is financial advice, but Michael Saylor is riding the roller coaster. He is riding the ride. He knows that volatility is vitality. He knows that volatility is a gift to the faithful. Are you faithful? I am faithful, and we have some big news to share today. Michael Saylor wants us to know that he is built for this, and this is built for this with a capital B. Just sitting back, relaxing, and enjoying the ride. And he also wants us to guess the bank, and that is bank with a capital Bitcoin B. I don't think we have to guess this time, Michael, because Morgan Stanley is obviously the bank. I mean, these two gentlemen are taking traditional finance by storm. They are taking TradFi. They're showing them what's up with 670,000 plus Bitcoin. And I say plus because I really expect they're doing a decent amount of buying this week again, because guess what? Michael knows something. Phong Lee knows something. They've been at JP Morgan, supposedly. They've definitely been at Morgan Stanley. Where they're going next, I'm sure we'll find out, because Michael is the most fun CEO, not CEO, because Phong Lee is the CEO, but Michael Saylor is the most fun leader of a company to watch, because he is so transparent. He is so straightforward. He is so single-minded and laser focused. He has laser eyes. And he was saying, the man is telling you what is happening, but are you listening? Likely JP Morgan, potentially. It's a bank, at least, a big one. Very obviously Morgan Stanley. What's coming up next? And Hermé says, MSTR, MS, JPM, and other partnerships. Referring his previous post, what is not being said out loud? Strategy is setting the stage with multiple partnerships and structured engagements with the big banks like JP Morgan, Morgan Stanley, and others, allowing the company to monetize its massive Bitcoin treasury indirectly. These strategic partnerships will enable Strategy to capitalize on the bank's regulatory licenses and comprehensive clearing infrastructure, while simultaneously unlocking substantially greater revenue streams than the firm could have achieved independently. This is phase 3. Whereas BlackRock, through IBIT, has established itself as the world's leading manager of Bitcoin ETFs, Strategy, via its Bitcoin-backed credit offerings with additional products forthcoming, is positioned as the preeminent and largest provider of Bitcoin-denominated credit worldwide. This is very, very big. Hashtag 2026, which I also believe is going to be a monster year. The Bitcoin therapist says, there's no doubt in my mind that Saylor and Phong are operating with a massive arsenal of asymmetric information. Strategy is going to be a digital capital monopoly, and there's nothing anyone can do to stop it. Bitcoin supercycle is loading. Chris says, what a lot of MSTR bears don't understand is that the stock could go to $10 tomorrow, and I still have exactly the same level of conviction, because my conviction isn't determined by short-term price charts. It's determined by a deep understanding of where the economy is likely going to be in 5 to 10 years' time. Ditto, Chris, double tap. Mike Alford said, I'm seeing more frustration on X than I've seen in 8+ years of owning Bitcoin. In that period, Bitcoin's gone from 1,500 to 85,000 with numerous drawdowns and crashes. Humans are frail and weak and most simply won't make it. Only the strong will make it to 1 million. Are you strong? Chris says, I expect MSTR to outperform Bitcoin by between 50 to 150% over the next 10 years. Ditto, amplification is real. Zinc says, just a reminder that focusing on short-term price movements is generally a waste of time. Think about where Bitcoin will be over the next 5 years rather than the next 5 weeks. They will never stop printing money. Bitcoin will keep winning. And Strategy had a little post of its own that says, Stretch is short duration digital credit. And it's showing the Stretch price essentially going right at around 1% over the time from August 12th until December 1st. All the while, they've been increasing the dividends from 10 to 10.25, 10.5, 10.75, and they're going to 11 next month. I don't know this for a fact, but I strongly, strongly believe that they are going to 11% next month, and especially if Stretch stays under 100 until then, which is only, 12 days away. So it's very exciting to see what's happening, because if you were on this Bitcoin price ride, it's a little less exciting, down 24% on this time frame. But now we have long-term outlooks. We are looking out 5 to 10 years here as MSTR shareholders. I don't have any options. I don't have any leverage. I just have 100% conviction in Michael Saylor, 100% conviction in Fong Li, 100% conviction in the strategy of strategy in the 670,000 plus Bitcoin that they have, and the 5 preferreds and more that are coming, and of the incredible amount of innovations and releases that we don't even know about that will be happening throughout the year of 2026 and beyond. It is so exciting. So sit back, relax, watch Michael Saylor give an amazing talk at Bitcoin Mania, and I'll catch you on the flip side.
We took the idea of Strife and then we did it in Europe. And we actually created a €100 par that pays 10% in euros for European investors. And we call that Stream. Same idea, Strife. And then after we've done all those, I'll call those digital notes. They're like bonds, but they're not bonds, but they're long duration digital credit instruments. Generally if you walk down the street and you ask the average person, do you want to buy a 30-year bond? Not many people want to buy a 30-year convertible bond. But if you said, do you want a bank account that pays you 10%? Everybody wants that. So we started thinking, how do we strip the volatility, the duration, the delta, and the complexity off the instrument? And we created Stretch, STRC. And the idea of STRC is we'll just pay a monthly cash dividend and try to get it to trade about at par, about 100. So if Strife is a 20-year bond, Stretch is a 1-month T-bill, a 1-month Bitcoin bond. Now, this next chart shows you the difference between credit and capital. We took Stretch public, and in August 1st, if you bought $100 of Stretch, it would have traded up to about 99. It would have traded up 9%, and you would collect $3.70 worth of dividends. If you had bought $100 worth of Bitcoin, it would have traded down $23. Which is the better investment? Well, over the 4 months, it's the credit. If you're going to hold it 4 years, it's the capital. Bitcoin is a much better long-term investment, but you wouldn't be able to tell from that chart. And if you needed the money tomorrow, you'd want the credit. And so what you can see we're doing is we're straightening out that volatility and we're stripping that risk and we're creating that cash flow. Now, remember I told you I had to pay more money for the preferred credit. That was the bug, but it became the feature. And then I said, well, we wanted to take it public. So we took it public. It pays a big dividend. It's backed by Bitcoin. And inadvertently, we created the most interesting credit instruments in the world. These are the most successful preferred stocks ever. And here's one way to see it. The average preferred stock trades over the counter. That means it's illegal for you as a retail investor to buy it. It's only institutions that can buy it. It's like 37 guys in a back alley trading baseball cards with each other. They trade 100,000 a day. Wide bid-ask spreads is not very good product. If you take them public in Europe or the US, they trade $1 million a day.
When you're ready to build your complete business identity, you want to do it fast and right. With Northwest Registered Agent, you can build your business identity in just 10 clicks in 10 minutes. When you want more, start your business with Northwest. Everything you need to launch and protect your business all in one place. Your business identity isn't just your logo or website, it's everything that represents you. From what customers see to what they don't, legal filings, state licenses, secure domains, and compliance tools. Northwest gives you more privacy, more tools, and more guidance so you can focus on growing your dream. For nearly 30 years, Northwest has helped entrepreneurs like us build confidently. You can form your business for just $39 plus state fees, backed by real corporate guides, people who know your state's laws and have your back every step of the way. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks in 10 minutes. Visit www.northwestregisteredagent.com/paidJLD and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/paidJLD. Michael Saylor just made an $835 million bet buying the Bitcoin dip. Right now, Bitcoin's fallen almost 40% off its October high, and the big money is buying the dip. What's your strategy? Now might be a great time to convert your IRA or 401k to Bitcoin with the help of Bit IRA. Plus, you can fund it with pre-tax funds, then continue to invest it over time as you do any other retirement accounts. Bit IRA protects your assets with end-to-end insurance, highly secure storage, multi-encryption, and registered with the US government. Your IRA is fully IRS compliant. Best of all, you can trade crypto within your retirement account without incurring taxes on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Bitcoin has proven time and time again to rebound, every cycle going from a higher low to a higher high. With Strategy's latest purchase, Michael Saylor clearly believes Bitcoin is at a discount. Time for you to get in too. Go to bitira.com/JLD to open a tax-sheltered IRA in Bitcoin.
The first credit instruments we created, like Strike and Strife and Stride, they trade about $30 million a day. So they were 30x more liquid than anything anybody had done before. But then people said, well, I don't want the volatility. I want monthly. I want it simple. Everything else is too complicated. So when we did Stretch, we found the right product market fit. And you can see the instrument started trading 130 million a day, 100x more interesting. That's in the first 4 months. It became 100x more interesting. I think this will become hundreds of millions, then billions of dollars a day. And you can say, well, why doesn't anybody else do this? Because the rest of the capital market approaches credit differently. When Apple borrows money, they borrow money tactically to finance a tax arbitrage. When Microsoft borrows money, they're borrowing it tactically to finance a data center. When a bank borrows money, they're borrowing money to fund a consumer loan business. The money that they're borrowing, they want to get as cheaply as possible. It's a tactic in order to improve a product or a service. For us, the credit is the product. We're not trying to minimize the cost of the credit or the yield we pay. We're actually trying to maximize it and strip the credit risk away so we can invest in Bitcoin forever. And so we're an example of a well-run company where the credit is the product and the rest of the capital market is full of junk bond issuers and investment grade issuers and bank preferred issuers. The credit is the byproduct, right? It's a necessity. But if the CFO of Microsoft had a preferred stock paying 10%, the board of directors would say, you should call that, retire it, refinance it, and replace it with 5% money. And so most well-run companies aren't trying to create good credit. They're creating crippled credit, credit that's good for the issuer, bad for the investor. And we inadvertently flipped that on its head, and we created credit good for the investor. And we didn't actually need the tax deduction because we're a treasury company. And we would rather pay a higher yield because we wanted to invest the money forever in Bitcoin. Nobody else has a use of proceeds to invest in forever that's going to go up faster than the S&P index. And so you have to have the right capital structure and the right corporate structure. And so I talked about the bug being the feature. One way the bug was the feature was we used preferred stocks. The other thing we did is we took them public because over-the-counter markets are very inefficient and the public can't buy them. The third thing we discovered is that if we pay the dividends by issuing equity or by selling securities or even by selling highly appreciated commodities, the dividend we pay is tax-free. It's tax-deferred. That is to say, you get the dividend, and then until you've reduced the basis in the instrument to zero, you don't pay taxes on it. Now, if you live in Dubai or Abu Dhabi, it doesn't matter to you. But if you live in New York City or San Francisco or London or Paris, it does matter to you. And so what we did is we created, in essence, tax-deferred dividends, huge amounts of them. And what does that do to the equity, right? Our MSTR is digital equity. Well, if I issue 10% of my Bitcoin capital as credit each year, I'm actually creating a BTC yield of 10%. So that means that every 7 years, I double my Bitcoin per share. So if you want to actually hold Bitcoin per share constant, you buy Bitcoin. Or you buy the ETF. But if you wanted to double your Bitcoin per share, what you'd want to do is issue credit instruments and then buy Bitcoin back. And you can see here that if we just run a routine amplification, then what we do is we 2x or 3x our Bitcoin holdings over the period that you would otherwise have the same. So the way to think of it is MSTR equity is amplified Bitcoin. It's more volatile. It's more performant on the downside, the upside. If you're an equity investor and you want 2x Bitcoin, you would buy an equity that's amplified by credit.
What's the second best? There is no second best.